What's going on, everyone? My name's Obi, and welcome back to Courtside Financial, the podcast where we talk about business and technology. In today's episode, I want to give a little clarification into yesterday's episode. Yesterday we discussed the report from Reuters about CATL potentially acquiring a controlling stake in NIO Energy. I've seen some comments misinterpreting what I was saying, so let me be crystal clear. Reuters reported this as reportedly happening, so nothing has been either confirmed or denied by either party. I simply explored what this might mean if it happens. That's what we do here at Courtside Financial. We analyze articles, reports, and we explore possibilities, and we discuss their implications. I never stated as a fact that CATL is buying out NIO's battery swapping business. I presented it as a possibility based on credible reporting from a reputable source like Reuters, one of the biggest business news outlets in the world, and I explored what it could mean if it did happen. NIO and CATL, they both have the opportunity to come forward with more information if and whenever they choose to do so. So far, CATL has said no further information available, and NIO has not responded at all. In my opinion, the silence in itself is interesting. If there was nothing further to the story, a simple denial would put all of this to rest. The simple fact that neither party is speaking on it suggests to me that there could be something in the works and the story might have some legs. So today, we could talk about it a little bit more. We've got that to talk about, and we've got some exciting new sales info at NIO. So let's dive in and let's see how the NIO story is really evolving. Let's start with what we know for certain. On March 17th, CATL and NIO reached a strategic cooperation around battery swapping. NIO's official announcement stated that the two parties will conduct capital cooperation, and CATL is promoting a strategic investment of no more than 2.5 billion RMB into NIO Energy to further consolidate the strategic partnership between the two parties. What Reuters reported most recently is that CATL is reportedly in talks, and keyword reportedly, in talks with NIO to acquire a controlling interest in their NIO Energy business, potentially going beyond that $2.5 billion investment. Again, this hasn't been confirmed or denied directly by either company, so none of this is a fact. It's all reportedly, allegedly, whatever you want to call it. Here's the context that makes this report plausible, though. NIO Energy is the subsidiary responsible for those 3,239 battery swapping stations. Currently, NIO holds 90.9% of this entity, with the Wuhan Guangcheng Fund holding the remaining 9.09% investment after 1.5 billion yuan investment in May 2024. Based on these investments, NIO Energy's valuation appears to be about 16 billion yuan. CATL's initial investment would represent 15 to 16% of the company. To acquire a controlling stake, they need to more than double down on their initial investment. Now, I want to be clear about what I find interesting here. NIO has promised to achieve profitability by Q4 this year. Selling a significant stake in their battery swapping business could potentially help them get there. And I'm saying potentially. Again, we explore possibilities. We don't rule anything out. It would provide immediate cash while relieving them of ongoing capital expenditures. Building these stations is expensive. Each one costs about 3 million yuan each. And even the latest generation runs about 1.5 million yuan. They've got operational costs, and each station needs to do 50 to 60 swaps per day to be able to break even. That's coming straight from NIO's own executives. On April 2nd, NIO announced that their CFO would serve as the head of NIO Energy. So think about that. Put a financial executive in charge of your most capital intensive business as rumors swirl around about its potential sale. That timing is certainly thought-provoking. As for CATL, they launched their chocolate battery swapping stations in December 2024 with plans to build 1,000 stations this year and 30,000 stations over time. They've already partnered with Sinopec to build at least 500 stations in 2025. For CATL, acquiring a majority ownership stake in NIO's battery swapping business would quickly make them the industry leader in battery swapping. They leveraged years of NIO's operational experience and technology development, accelerating their transformation from just a battery manufacturer to a complete energy service provider. These battery swapping stations aren't just service points. They're distributed energy storage facilities that can charge during off-peak hours and help the power grid. In 2024, NIO had 800 to 900 stations participating in off-peak regulation, creating additional revenue beyond service fees. So while nothing is confirmed nor denied, the strategic rationale is strong for both companies. It's something I'm watching closely, and of course I'm going to keep you updated as more information becomes available. Now let's talk about what's definitely happening. NIO's impressive sales during a Chinese holiday. According to a local media outlet, NIO received about 3,500 orders during a 3-day holiday period from April 4th to April 6th. So what drove this surge? On April 3rd, NIO announced an additional 5 years of free battery swaps capped at 240 swaps for customers who placed deposits on 2024 models of the ET5, the ET5 Touring, the ES6, the EC6, the ET7, the EC7, or the ES8 before April 30th. This came on top of 5-year 0% interest financing that NIO had already extended out into April. So the strategy clearly resonated. We're seeing 3,500 new orders in a 3-day period. That's significant momentum considering that NIO delivered just over 15K. I think it was 15,039 vehicles in March alone, with 4,820 of them coming from the Envo brand. The timing of this promotion is interesting. It appears to be aimed at clearing out inventory for older models before the launch of the facelifted versions hit the market. William Li previously announced that NIO's main selling models, the ET5, the ET5 Touring, the ES6, and the EC6 would get updates featuring horizontal screens instead of vertical screens and NIO's in-house Shenji autonomous driving chip. NIO plans to launch new models every quarter from Q2 to Q4 this year, and the Firefly brand will launch its first model on April 19th, right around the corner, adding to NIO's portfolio of 9 branded models and the Envo L60. What's particularly interesting about the local media that had reported NIO's boost in sales is that they noted that this isn't the first time NIO has used battery swapping incentives to boost sales. When they enhanced their battery as a service offerings last year, they achieved 20,000 vehicle deliveries multiple times. So anyways, to wrap things up and tie everything together, where do we stand? While the news about CATL potentially acquiring NIO's battery swapping business or acquiring a bigger stake in it, whatever you want to call it, is not either confirmed or denied, there is some strategic rationale that could make sense for both parties. So it's something to be talked about, and we don't just talk about anything that flies across the internet. If Reuters is reporting it, that gives me the rationale to want to not report it, but discuss the possibility of it and discuss if it's something that makes sense, why could it make sense, or if this is something that I don't think would ever happen. If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. It's an interesting story to follow. I'll continue to put out information as it becomes available. What is confirmed is NIO's aggressive battery swapping incentives and how that has bolstered sales for them to be able to get additional 3,500 orders in just 3 days. And I also want to emphasize that it's not just 3 days, it's in 3 days during a holiday season. This demonstrates their commitment to the battery swapping business, regardless of any potential further partnership with CATL. As always, I remain a NIO bull. I'm still invested even though the stock isn't looking too good right now, but I try to remain objective in everything that I talk about. The company faces real challenges on their path to profitability, but they've also built remarkable technology, and if they can leverage that technology in ways that are going to ultimately help out the company, then I'm all in for that. Their battery swap network represents 7 years of investment and innovation. Whether they retain full ownership or share it with a strategic partner is yet to be decided, but hopefully they make the decision that's best for the company, and I don't know what decision that would be. That's going to do it for today's episode of the CF Podcast. Hope you guys found this useful, helpful, at the very least entertaining. Any of those things, you already know what to do. Hit the subscribe button, hit the like button, click the notification bell icon, and I'll catch you in the next one. This is Obi signing off. Thanks for watching.